All right, let's talk about Weber, shall we? The barbecue brand missed estimates for the second quarter, and sales took a hit from global supply chain disruptions and a slowdown in retail traffic. You see their sales missing estimates. The stock is down about 19% in pre-market trading.
Getting cooked.
It's getting fried. But no, it's interesting. And I want to look right at the guidance here because that's what the stock is trading off. Weber lowered its full year operating profit guidance to 140 million to 180 million. 3 months ago, just in February or close to February, they outlined 275 million to 325 million in profits. That is a major haircut to guidance. What I do not like, major red flag in this report, major red flag for all these retail earnings we're about to get. Weber noted a slowdown in traffic and point of sale sales in the most recent quarter. Has me worried about how Macy's performed in the quarter, how Home Depot and Lowe's that sell these Weber grills, how they did. And of course, we just talked to Traeger CEO Jeremy Andrus. Here's what he told us about the current conditions in grill land.
We are very optimistic that, as we get towards the end of this year and particularly coming into next year, some of these forces that have been sort of turned supply chains upside down, they'll begin to right-size themselves. We're certainly not calling victory yet, but we see some early signs that in the not-too-distant future, things will improve.
Now, a little bit of different case here for Weber because they do manufacture a lot of their stuff here in the United States. Traeger, I think, relies more on a supply chain overseas, but still not a good look here for Weber here.
Coming back to that slowdown in traffic, though, that you mentioned, that is a much broader issue here. Retail traffic, in-store, online, slowed broadly in comparison to last year for Weber in this most recent quarter. And that's what drove lower the point-of-sale performance, as you were bringing up, the decrease in sales volume, partially offset by certain pricing actions. But how long will you still be able to engage the wallet of the consumer at a higher price, especially if they're not looking to revamp the number of grills or items from Weber that they have? I mean, we've seen a lot of people purchasing over the past 2 to 3 years into their home experience, the deck or the patio included, and that's where Weber certainly can be a beneficiary. But if you see any type of slowdown in that volume, that's particularly what could be a red flag for some of the investors going forward.
What do you like grilling, Julie? What's your favorite go-to?
I don't know. What do I like grilling?
You're the chef. You make lots of stuff.
I don't do the grilling in my house.
All right, fair enough.
Kebabs.
My husband does the grilling in my house. Kebabs, that's your go-to grilling thing?
I mean, I love throwing a good steak on.
I'll add this too. Look at the stock prices here on Traeger and Weber. These are strong, well-known brands, and I would have to think they have come down so far, so fast. At some point, they both become in play for takeovers.
Wait, you didn't answer your own question.
What's that? What do I like to make? I cut barbecue at my brother's house 2 weeks ago in the rain. Very nice, lovely steaks that he picked up. And, I used to barbecue on the rain as a kid. I have no problem with it. I'm willing to brave the elements to get my cooked meat.
Yeah, my husband barbecues in the rain.
Right?
Also.
It's a rite of passage.
I like burgers on the grill. I like steak on the grill. I like chicken. I mean, I like most things on the grill.
What about pineapples?
Although, pineapples on the grill, good. You know what? I'm going to be my Debbie Downer as I usually am. Cooking on the grill is not good for you.
Oh, come on.
The char is not good for you.
Can you just... No.
Lastly.
Sorry.